All right, folks, welcome back. Quick little ditty on Non-Farm Payroll Friday, September 2nd, 2022. All right, so you should have these levels on your chart right in here, this high, that low, and this specific swing low. I'm not going to do all the work for you. Okay, so look at last night's video and you'll see what I'm referring to. All right, and that's these levels down here. The high of the fair value gap, the low of the fair value gap, and the old low on the daily chart. Now, if you recall, if you were able to watch last night's video, this is why you don't want to jump around. Okay, because I'm going to be talking about something and it won't have the same impact as it would if you were to watch the videos in the order I released them and then see the delivery of price after I call for it. So last night we were looking at price in here. I mentioned how I liked these relative equal highs. I felt that it could draw up into that next. I was not bearish. I wanted to see it go up here, but I made an allowance for maybe going into next week before it would get there, thinking that maybe non-farm payroll would be a little bit of a lackluster event, not quite get up there, but anything could happen. That was my words. Anything can happen. Now, without making this video very long, because I'm going to make it short and concise, I do not like to trade non-farm payroll. Okay, I don't like to do it. I engaged it today just to give one more little bullet point on the week, because I like to give, obviously something real time before the fact and point you all to it and kind of like prove the concepts, also to shoot for yourself using the logic and the experience I'm lending you. So we have a small little gap in here. We drop down into that. This is a bullish order block. You'll see that when we drop in the lower time frame, but it goes right up into these relative equal highs, bumps the buy side liquidity, and then rejects, goes right back down into the fair value gap that I outlined last night. So to a premium, to a discount. Logical levels you already knew about. All right, 15-minute time frame, down close candle, rallied, small little gap, goes down into it, order block, hits it, accumulates, short-term high taken. We drop down, rally, short-term high taken, fair value gap in here, 8:30 in the morning, New York local time, non-farm payroll. If you try to take that trade at 8:30, you're going to get crushed with the slippage, and if you get filled, it's going to be very poorly placed. So you don't want to be trading non-farm payroll. But it takes off in the direction we outlined last night, towards the direction of the relative equal highs up here, where buy side liquidity. What is buy side liquidity? Buy stops that are resting pending orders above highs. It can be a single high or relative equal highs. Treat it like resistance for retail. They think this is where the market's going to hold. So they're short. They place their stop loss here. Large funds trade like this as well. They don't like to trail their stop loss real quick. So they'll leave their stop loss there. That's the reason why the market goes right to that level. That's the reason why I outlined it last night. And that's how you see it today in your chart. Not cherry picked, not the wrong direction, right out of the book of ICT. So it trades up into it, bumps it, then it creates, what is this pattern in here? We have a quick run up, consolidation. If you didn't know about this level over here, or the logic of reaching for that liquidity, what is this pattern right here? Bull flag. It's a retail continuation pattern. But it's not going to work when you're up against something that I outlined last night, which is the liquidity here. It ran up to it and then failed. So this is a false bull flag. Just taught that recently in the core content. So go back and watch that lesson as well. We broke down, attacked the sell side here, and then went for these lows here. The only thing I mentioned today on Twitter, but it was really just mentioned in passing, when we were trading around the 39.19, 39.18 level or so, I saw that we were likely, I don't know for certain, I just said maybe 39.03, maybe. I tweeted that. So it didn't quite get down there. It stopped just below the fair value gap low, but didn't take the lows out here. So here's some tweets. I will counsel you to do this on your own. So that way it helps you kind of like see things as I tweet, especially for the folks that work or run a business or go to school during the time when I'm jawboning and tweeting and driving you crazy on Twitter. Some of your bosses are probably thinking, what is going on with this people? Their phone's constantly going off. It's me, okay? Just like I like to talk too much, I tweet a lot, okay? But I treat my Twitter like a squawk box, okay? So things I see that's noteworthy, I'm going to put it out there. Sometimes, like today, I gave a lot of jawboning because I have a personal issue with a person out there that just keeps on ducking. But these are the things I tweeted today. Now, there's obviously a lot of tweets I gave today, but the ones that were pertinent to the marketplace, these are the ones that I want you to focus on. I didn't give any miscues. I didn't call out something wrong. It was just basically this. Okay, we were looking for the logic, reaching up to that 4017 and 3/4 level, or 4017.75 level. And also I mentioned right at 1023, I said draw a horizontal line at 4017.75. That's this line right here. And it was given as a tweet right here on that candle. Rallies up, just bumps it to 4019 and a quarter. I believe that's what the high was. Check it. Don't take my word for it. And then consolidates, creates a potential bull flag, right? Wrong, Jack. Breaks lower. I hinted at it here before it broke. Note how ES was walking along that level, 4017.75. After sweeping it, sell side is next. So it sweeps it and then stays below it, right? That's not a continuation pattern to go higher. That's a failure to go higher. It breaks lower, sell side is here and here. And I'm noting that as it goes into this candle here, there's your sell side, and there's one more. There's another tweet, I didn't add it, but it's as we were trading below here, there's your second level of sell side being tripped. That ultimately trades lower into the fair value gap on the daily chart. Now with the tweets out of the way, sell side liquidity here, here, let's take a little bit closer look at it. We have an order block here. We drop down at the 10 o'clock hour. Bullish order block, fair value gap, drops down and rallies. Why should this send price higher? We didn't take the buy side yet, right above this level. So there's unfinished business above this high and those relative equal highs, which is that level here. So order block, rallies, hits it, consolidates, going into lunch. What's lunch hour usually do? Retrace. So if it's retracing, what's going to attack? Lows, 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 lows. And that's why I outlined it. It's walking below here. Turn your attention to what? Sell side. Start looking for old lows to be traded to. And it does so in stunning fashion. Breaks lower. Small little gap in here at 1 o'clock, about, I guess, quarter after 1, something to that effect. A little too early for my likings, and I wouldn't be trading on non-farm payroll anyway, but rallied up into a fair value gap there. That's a short. Broke lower. Fair value gap again. Trades up into it. Sells off. Comes back into the bodies here. Rejection block. Again, you'll learn that. And then breaks lower. Back into the fair value gap. If you look at this pattern here, this is my power 3. Okay, now obviously some of you that have been trading for a long time recognize this as a simple open, high, low, and close bar. The open, high, low, and close. My power 3 concept is if I'm bearish, I'm looking for lower prices, it's first got to go to a level where it should be repelling price, sending it lower, failing to go higher. So we open here, we rally up, hit a specific PD array in the form of a premium array. Then there's expansion to the downside, hits a level that would be a target for a discount, then comes off that low and distribution takes place. So as it's trading into that low, their shorts are being bought back. So they're distributing what? They're shorts to the marketplace. How do you distribute your position when you're short? You buy it. You buy it back. So that way you're offering a short to someone else by being a buyer as your short position is covered. So, and long and short of it is this, no pun intended, short more, hold, buy it back, and then the day settles here on the close. So what that means is smart money is accumulating short positions. The market is manipulated higher to allow for even more premium to short into for smart money. It's not buying pressure. The market's going up here for a particular reason. Then there is expansion to the downside to a distribution point where the market should draw to. So a draw on liquidity, a draw on liquidity. The sell program begins here, manipulation, distribution, AMD, accumulation, manipulation, distribution. This part of the move here is where you can do fair value gaps that offer opportunities to get in sync with something that already is hinted at in your analysis, that this is where it's likely to draw to. So if you miss these moves here, don't be upset. This type of movement in here is where there's really easy fat and meat on the bone. You don't need the end of the bone here and the end of the bone here. And think about it. You ever eat chicken leg? Where's the meat at? Is it on the end of the bone or over here? No. It's somewhere in here. Or if it's upside down, here. Okay? So you want the meat of the move. So what does this mean? What is this graphic really depicting? Well, look closely. That's what you're seeing here. Right in here, you'll see that this is the opening price at 9:30. They drop it down to send the market participants into a frenzy to do what? Chase it lower. So if it starts going down like this and drops and runs out a short-term low like that, what takes place here? These stops are sell stops. So this triggers a flood of new selling orders in the marketplace that smart money can buy. They can accumulate longs in here and ride it up to the high, that 4017.75 level. Then they can reverse there. Other smart money entities will do nothing in here, and as it starts to rally up, they're selling short, selling short, selling short, selling short, selling short, selling in here, and then when it breaks and releases lower, they start buying it back below this low, buying it back below these lows here, and then back in that old daily fair value gap over here. So it's this type of movement with what I just showed you. That's my perception of price. That's how I was interpreting it today. I was looking at it with that perspective in mind, not every individual candle here, because while there's a lot of folks out there will say time-based charts are useless, that's because they don't know how to use them correctly, and they don't understand the concept of time and price that the algorithm follows. So when you understand these types of things, and hopefully you can see now, I mentioned this very specific level, we drew up to it, and then in real time in the marketplace, I actually explained how it's going to break from these levels here after it went there, after it went from a long in here on a 1 minute chart, and you can go to my Twitter and see that. And the exit was here, right as it went above it, right on the highest point of the 1 minute candle, not one after the highest candle. It was the very highest candle. I'm not sharing that 1 minute chart here because it's already on my Twitter. So you do your own research and use your own due diligence to go into this and study. If you're lazy, it won't work here with me, okay? Because I demand a lot of effort on your part, and I'm not going to do all the legwork for you. But we have the expansion lower, attacks the sell side here. Then we have the fair value gap, everything I mentioned earlier in the video without having to repeat it all. Okay? So hopefully you found this one insightful. Enjoy your weekend. Be safe.